Welcome to Apartment Syndication Made Easy podcast, where we simplify the world of syndication. Join us as we unravel the complexities and provide you with valuable insights to help you invest smartly. Get ready to take your investments to the next level, one episode at a time. Here's your host, Mr. Vinney Chopra.
Hi there, guys. This is Vinney Chopra back again. I hope you're liking all the great content myself and my team is putting out in my YouTube channel, in Instagram, of course, LinkedIn and Facebook pages, my podcast, and my 2 live shows that I do every Thursday morning, 9 a.m. I was on vacation, as some of you know, for about a month. And now I'm back. So Thursday, 9 a.m., Abundance Mindset with Vinney Chopra. Please grab that again. And then Vinney and Bo show on Friday, which goes into 16 different live channels, social channels. So thanks again for taking time to review the materials and everything. I've got a great guest here with me. Mark is here. Mark Khuri, should I say that?
Yeah, Khuri, you got it.
Yeah, I got it, brother. Yeah. And, he's the vice president and co-founder of SMK Capital Management. He's, I think, a doctor, his wife, and they started and they have done over 1 billion in the transactions, which is like over 120 properties, investments successfully bought and renovated and sold, all those things, and 60 real estate partnerships with investors. So he's got a lot of great experience, about affordable housing and strategies to create recession resistant, which we are going through right now, real estate portfolio, tips on deal underwriting. So we're going to dig into that. So I hold on to it and let's just meet him. Hi there, Mark. How are you?
Vinney, I'm well. Thanks for having me.
Oh, it's such a pleasure. Such a pleasure. We were just discussing, you're in Bend, Oregon. And, I will be, after the podcast, send you the blurb, which just came out last week or 2 weeks back, where we broke the ground overlooking the river. And it's a beautiful lot, which we bought for 3.950. It's worth doubled, 7.95 million now. Where we'll be building 37 condominiums, brother. First, we'll be selling those condominiums to build 2 hotels. From the profits of those, we're going to be building 2 Marriott and the extended stay hotels with also the high-end retail center and everything. So I will share with you some. And some of my investors are my other friends also. We are doing $100 million fund right now, which is 506C, hospitality fund. So, I can talk about it because it's 506C and,
Sure.
And so on. So, no, I'm so excited. Tell us, how did you get started a little bit? And then what are your superpowers? Where are you looking? The market is going to be taking us in this 2023 and 2024. Huh?
I got started in finance, Vinney. I was working in corporate America for a number of years. A lot of fun stuff, spreadsheets, analysis, budgets, and planning. I started investing in real estate on the side, very active investor. That was in 2005. Mm-hmm. Bought a property, bought another one, partnered with my brother, partnered with my folks, kept doing active investing kind of on the side while working in corporate America from 2005 to 2010. Mm-hmm. At that point, my father and I just kind of saw an opportunity to make a shift. He is a retired orthopedic surgeon by trade. He's been a real estate investor since the 70s. Mm-hmm. And so we decided to partner up and create our company.
So that's your dad then,
That's my dad, yeah.
I got you. Yeah, okay.
That's right. So that was in 2010, Vinney. We created our firm, SMK Capital Management. That's he and I's initials. Mm-hmm. And we were really, at the time, we're just focusing on expanding what we were already doing as a family and letting others invest with us and into our deals. And so we were an operating partner for many years, focusing in the earlier years, Vinney, really on single family, small multifamily, a lot of heavy value add, distressed acquisitions during the Great Recession. And a lot of fix and flips and building a rental
portfolio. Mine, brother, same thing. So similar story, started in 2005 or 6. Also, I'm a broker in California. I live near San Francisco, by the way. So
okay. Yeah.
Bend, Oregon, and
That's right.
yeah.
Yeah, no, very interesting background. I mean, we started out really just focusing on diversification too, right? That's been a big part of our thesis for a while, Vinny.
Mhm.
When I left corporate America, I had a 401k. It was sitting idle. What am I going to do with this money? Where should I invest it? And you can imagine 2009, 2010, it was a scary time. And so I started networking my butt off. I learned a lot about mobile home parks. I learned about apartments. I learned about self-storage, these other more, I would say, recession-resistant asset classes that did well, all things considered, through the recession. And I started investing in those, and my family did as well. And then we started syndicating deals with other operating partners, and all while doing our own investments. And fast forward today, we focus predominantly on private equity. We raise capital from our investor group. We partner with operators in different asset classes. Really, those that are specialists in one thing, usually, Vinny, they're best in the best, and they do it better than we do. So we'd like to partner with them and invest together.
Nice.
So
I know that you're going through big change right now, with the bridge loans and everything that's happening. And some of the portfolios have gone south, the cash flows. I know insurance, by the way, has gone skyrocketing in Florida, in Texas, all over. So where have you been buying? In your backyard or other places?
We don't buy much in our backyard. We we like cash flow, Vinny, and growth in that order. And so we stay away from the coasts usually. We stay away from the Northeast. We typically like to focus on, I would say, states that have a lower probability of ever having rent control. And so we like to focus in areas of Texas, in the Midwest, in the Southeast. There's so much data, as you know, Vinny, that keeps pointing back year after year, but these are the fastest growing locations in the country from a economic, population, demographic standpoint. And so that's typically where we're focusing. In the Midwest, you get a little bit more income, maybe a little bit less growth, and then vice versa in the Southeast.
So you said you don't manage them or something, I just heard. So do you work with some other GPs and you become as partners with them? They bring the deal, you guys underwrite together, and then you become 50-50 partners, or how do you do it?
Yeah. There's a lot of different ways we structure our deals depending on what the deal is, who our operating partners are. So we rely on another firm to handle the execution of the business plan at each investment. Now that firm is heavily invested. It's our deal together. We're investing with them. They have usually an acquisitions team, an operations team, asset management team, a back office team. And so we're basically handing over the day-to-day operations to them.
Yep.
And then in turn, we're able to diversify and spread our capital across multiple operating partners. And so we create funds, Vinny. A lot of times we'll combine multiple operating partners' deals together into one fund so we can really reduce risk. We can really spread capital across people, across property types, across regions, across income, growth, really always focusing on lowering risk and still doing quite well from a return.
That's amazing. No, that's so true what you're saying. Like the $100 million fund I was discussing, it's also diversified in multifamily, in storage units, and of course, in hotels, hospitality, and ground up senior assisted living. I'm really big on that. For the last 5 years, I've been really crushing it in that field, to be able to build it ground up. And now we are converting hotels, suites hotels into senior assisted living also.
Wow, it's great.
The diversification, like you said, is so important for a accredited investor or, sophisticated investor like that. So you've done 506C's funds or B funds? Which ones?
Yeah, we started out friends and family, Vinny, so all 506B, and that was before the Jobs Act got passed. And then we've transitioned over the years, like most in the industry today, are 506C. And so almost all of our investments are 506C.
Beautiful. What would you tell the audience? Like, what are certain, let's say, 3 main things if they want to invest with you? What kind of questions do they ask you?
Sure. First is, what makes you so special?
So true. Yes.
Yeah, you should ask that of everybody because everyone seems to have some special sauce, right? And so we usually tell folks that we have a lot of experience. We work with the best people in the business. We are people first. We also bring an operator's view into a lot of our deals as to some of the execution risk of the business plan. And also the financial underwriting. So kind of having a few different hats of many years of experience helps us, we think, create a really attractive risk-adjusted return for our investors. Another important point, when people ask you what kind of questions they want to know, we are always listening to our investors first. So I oftentimes will ask them, what are you trying to achieve? Just trying to grow your capital dollars. Are you looking for passive income? Are you looking for a blend? Do you need depreciation? And so really for us, it's a lot of listening to make sure, number one, that we're a good fit. But number two, we have several offerings a year. One might be better than the other for them from what they're trying to achieve. So that's another big part.
Excellent. No, that's so true. I mean, listening to them, it's really the key part where everybody's got their own mission and their own risks, tolerances, and what they want to achieve. You're so right. Yeah, like in development projects, I'm finding cash flow is not there because it's dirt, right? Like we were discussing the Bend, Oregon project and all, but it's going to get going in about 2 years or 2.5 years. We'll get some monies, cash flows coming in, but we catch up. So we call it catch up. The investors start getting from, like let's say 90 days or 120 days or whatever after they invest with us, but then they're caught up in the second year for first and second year, and then meeting the IRRs and all that. Right. What would you say then, at this time, are you focusing in particular sector of the commercial market, or which one is really bringing good results for you?
Yeah, absolutely, Vinney. We've, myself, my family, our company, over the last, call it 15 years, we've invested in over a dozen different asset classes within real estate. Today, we really focus on about 4. It's on purpose. There's a lot more that we don't do than what we do. And it's all methodical. It's based on our thesis of, long-term demand growth for our assets from the residents that use them and from investors who will buy them, right? That's our exit. Who are we going to sell to? Is there going to be more or less buyers in 5 to 10 years? And so we're really trying to make sure we're picking assets where we think there's a strong tailwind that can help us achieve our goal. But also we're looking for recession resistance. And that's a big part of what we do every day. And I can expand on what that means. I know it's a term we probably hear a lot. We've been creating recession resistant funds for a little over 5 years. We look at affordable housing, mobile home parks, tax-exempt apartments. It's a very specific niche that we love. Some self-storage. And we also look at, we've been investing a little bit in ATMs. And we're looking at investing in triple net industrial warehouses as well. And so
I love it. These are really very, very good, solid niches, in commercial market. I know one very good friend of mine who was my student also, Dylan Marma, a lot of people, please Google. And he started in my academy, I think 5 years back. He's got $250 million portfolio now in mobile home parks and all these different, commercial assets, and storage units is the main big one, industrial and others. And then just like you said, the other markets that you mentioned, ATM, actually, I invest in ATM too, with my brother Dave Zook. I don't know which one you use, but, there are lots of different diversified portfolios. You're right. And I think you mentioned a couple of other ones I forgot. But the key thing is you didn't say multifamily. And that's what I want to drive the point across with my audience also. Multifamily used to be really big. Oh, no. I'm going to come back to, I know exactly. I'm going to, the other one, which is a huge thing in my books also, affordable housing and the tax benefits and, opportunity zones are kind of mix and match, but affordable housing is amazing. And a lot of places where you could get free land and so many tax deductions which really makes it very attractive. I totally see. And we even do the hotels we are doing now, where the local, jurisdictions, they're giving us special tax rebates and, things like that, so forth, and assisted living too. That's my other one, which I'm finding lots of in St. Louis and this and Kansas City and some other places I'm going to. They're giving me incentives to build them, over there. So no, that's true. So affordable housing, can we dig deeper into that if you don't mind? So
Yeah, I'd love to.
The build to rent affordable housing, or is it apartments, or which one? Huh?
We focus on two asset classes, Vinney, in the affordable housing sector. The first is mobile home parks.
Mobile home. Okay, got it.
Probably the most affordable housing solution in the country.
True.
Very much lowly correlated or uncorrelated to the economy. You tend to demand increase during tough times. So there's a lot of reasons. We've been investing in mobile homes for over 10 years. It's one of our favorite asset classes. The second is tax-exempt apartments or multifamily, as you mentioned. This is really a specific niche where we partner with a local municipality. We create a public-private partnership. And what we do, Vinney, is we take half the units and we allocate them as an affordable component. And so the rents and the income are tied to the local area median income. And we use it's a formula based on how much the local area median income is. We keep those units affordable. The other half of the units are at market rate, and so we can keep growing rents there as well. The big benefit here, Vinney, is you creating this structure. You get a property tax exemption, typically for up to 99 years. You don't have to pay property tax.
I was going to say that. Hold on. 99, I was told, somebody shared that with me just lately. They said, Vinney, for 8 years, I think, they didn't have to pay. And it came to almost so many millions of dollars. I mean, this was amazing. And they had to do only out of 475 units, I think, about half, 175 in this case, which we were discussing, So is it 99 years, you said?
The partnerships that we focus on have a tax exemption for 99 years, and it's transferable to the next buyer too. So
wow. No, this is very good. I hope everybody listening to us, and it will be also in the YouTube also. We'll be putting the whole video, our conversations and everything on iTunes, Stitcher, and everywhere. But also the podcast goes on my, the YouTube channel also, and reels are made and all those things, right? Mark. But it's very important what you just mentioned. There are so many great opportunities. People don't really look through those. And tax rebates, that is, if you don't have to pay taxes of millions of dollars, that's cash flow. That comes to the bottom line. And with interest, the insurance going up in Texas and Florida just doubled. I couldn't believe it. I sold my Bentley in Orlando. Thank goodness. Last year, I'm selling another one there, and I bought and other things. But the insurance is going through the roof. So that's something also, will really help getting into special niches that, like you are saying, right?
Yeah, one thing, Vinney, just to talk about that, we've seen the same thing with expenses. As inflation goes up, your expenses go up. And we've seen that across insurance, payroll, maintenance costs, utilities, everything's gone up significantly in the last year and a half or so, since inflation started to become a big problem in the country, right? And so one of the ways we fight against inflation from an investment standpoint, Vinney, is triple net industrial properties. So any type of expenses, this include, if it's absolute net, it means that the tenant has to pay for the taxes, the insurance, the maintenance, the utilities. They pay for it all. And so what we're doing is we're insulating ourselves, creating a hedge against the inflation that we're seeing on our expense line item. So that's another asset strategy that we love today.
I love it. You have just dropped so many gold nuggets. I appreciate that, Mark. I know a lot of time we are only talking about hospitality in my case and senior living, multifamily, but you've really given a depth of other niches which one should really look into, by the way. And there are tremendous opportunities. I always say there is a big pie for everybody. because every MSA and the tertiary markets have the needs for the niches that you talked about. And no, this is so exciting. It's been such a pleasure to hang around, with you. Yeah, Mark. And how can people reach you, and any last comments you'd like to tell the audience about? Yeah.
Sure. Yeah. And our website is SMK Capital Management is the name of our company, smkcap.com. I honestly, most of the folks we work with, Vinney, I talk to one-on-one, and we build a relationship. We're more specifically focused on providing people what they need.
Yeah.
And so if you want to chat, my email is info@smkcap.com. Happy to talk, share information, opportunities, see what might be a good fit.
Excellent. Excellent. No, thank you, Mark, for taking the time to be on my show, and, God bless. And we'll talk about the bend, in a little bit also. Sure. We'll see you next time, guys. I hope you are really subscribing to the channel on the iTunes, Stitcher, and all, and giving 5-star reviews if you think you got some good information out of this podcast and all the other information. Thanks for watching, and I'll see you next time. Bye-bye.